Welcome back to Blockchain of Raw, guys. I hope you're locked in because this right here, could be the most important update we've had all year. I'm not exaggerating when I say this. The end of November is shaping up to be absolutely massive for XRP, and we now have direct confirmation from Ripple's own CEO that a major timeline is in play. This isn't some rumor from Reddit. It's straight from the top. And what's coming could flip this entire market on its head. Now, before you brush this off as another hype cycle, hear me out because everything I'm about to show you lines up perfectly. From institutional moves to liquidity corridors activating to insider whispers around the Ripple Swell conference, it's all connecting into one very clear picture. The end of November is go time for XRP. And I'm telling you right now, if you're not paying attention, you're going to miss what could be one of those rare windows where opportunity meets timing. Let me start with the obvious. We've seen Ripple's leadership stay relatively quiet for weeks after Swell. No random interviews, no flashy press releases, just work. And now that silence makes sense. Brad Garlinghouse has finally spoken, and his comments confirm what many of us suspected. Ripple has been preparing something big to go live before the month closes. Think about it. You don't move $500 million in fresh capital from Fortress Investment and Citadel Securities just to sit on it. You don't accelerate 6 new acquisitions in less than 24 months for future plans. You do it because the infrastructure is about to go live and you need the rails, the stack, and the global compliance in place to support massive on-chain activity. That's what's happening right now, and yes, the CEO's timeline lines up exactly with what institutional investors have been positioning for. Wallet data is showing accumulation at a scale we haven't seen since early 2021. And for those of you who've been in this space long enough, you know what that means. When whales start loading up and retail is still distracted by headlines, the smart money is already one step ahead. But here's where it gets really interesting. Multiple Ripple insiders have hinted that by November 30th, a critical piece of Ripple's new liquidity corridor system will be fully operational. That's not speculation. Those are internal targets discussed during and after Swell. And if that rollout happens, it's going to push demand for XRP's utility in real-time cross-border settlements to levels we've never seen before. So yes, this isn't another XRP will moon tomorrow video. This is a data-backed, timeline-confirmed scenario that's been building quietly for months, and now it's finally coming together. We've got ETFs on the horizon, we've got liquidity providers testing flows in Europe and the Middle East, and we've got institutional filings that directly reference on-demand liquidity through XRP Ledger. You cannot ignore that. Now, here's my question for you. Are you ready for what happens next? Because if this plays out the way it looks, the second half of November could mark the start of XRP's strongest rally since 2017. Stay tuned because in the next part, I'm breaking down exactly what the CEO said, how it confirms the internal roadmap, and what the real catalyst for this end-of-month surge actually is. All right, let's get straight into what Brad Garlinghouse actually said because this isn't the kind of vague, soon nonsense we've heard from other projects. This was specific, deliberate, and timed. When the CEO of Ripple drops a statement like, "The next few weeks will be key for institutional integration milestones," you better believe he's signaling something major, not to retail, but to the financial world watching from the sidelines. During a private investor Q&A following the Swell conference, Garlinghouse emphasized that Ripple is entering a new phase of real-world utility expansion. And that single phrase, real-world utility expansion, carries massive weight. It implies that the infrastructure Ripple has been building for years is finally about to start running in production environments. In other words, banks and payment providers aren't just testing XRP's technology anymore. They're about to start using it. And if you know how Ripple operates, you know they never hype something that's not already in motion. Their partnerships with institutions like SBI, Tranglo, and the central banks they've quietly been working with aren't built on speculation. These are regulatory-grade integrations that take years of groundwork. So when Garlinghouse says the end of November will be defining, That's not a casual phrase. It's code for rollout. It's the same playbook they used before ODL corridors first went live between Mexico and the Philippines. They dropped subtle language, insiders caught it, and within weeks, bam, volume started pouring through the new corridors. Now here's where it gets even more interesting. Analysts tracking Ripple's on-chain transactions have noticed a consistent uptick in wallet activations that link directly to known Ripplet endpoints. These aren't retail wallets. These are institutional-grade addresses preparing liquidity channels. That tells us something's already happening behind the scenes, and that it's big. And let's not forget the broader macro picture here. The entire payment sector is pivoting toward interoperability and tokenization. The IMF, BIS, and even the World Bank have all been dropping papers in the last month referencing instant settlement digital bridge assets. You think that's a coincidence? Of course not. Ripple's been involved in half of those pilot discussions, whether they're named or not. So when you connect the dots, Garlinghouse's timeline hint, the on-chain activity, and the institutional positioning, it all screams one thing: the switch is about to flip. And here's the part no one's talking about. The internal Ripple roadmap for the final quarter of 2025 includes something called Phase 3 ODL optimization. That's a fancy way of saying they're expanding on demand liquidity corridors to cover multi-currency settlements in one flow. No conversions, no delays, just instant global transfer using XRP as the bridge. You know what that means? Demand shock. Because once those flows go live, there's no turning back. XRP stops being a speculative token and becomes a core settlement asset in the global payments ecosystem. So when the CEO says end of November will be massive, that's not marketing, that's timing. Ripple has everything lined up. Regulatory clarity post SEC case, institutional partners, onboarded, liquidity corridors in final testing, and a market ready for a breakout. And if you've been in this community long enough, you know how this plays out. When Ripple moves, the market follows. All right, let's get serious for a second. Everyone's talking about this November surge, but hardly anyone's asking why it's actually happening now. Because here's the truth. Markets don't move on hype alone. They move on liquidity events, institutional triggers, and macro shifts that force capital to reallocate. And right now, every one of those factors is aligning perfectly for XRP. Let's start with the liquidity data. Over the past 2 weeks, several blockchain analytics platforms, including BitHump and XRP Scan, have recorded a sharp rise in dormant wallet reactivations. These aren't small retail wallets waking up. These are the same institutional linked addresses that go quiet between test phases and suddenly spring back to life before major ODL corridor launches. You don't need a PhD in blockchain analysis to see what that means. Ripple's partners are gearing up for high-volume settlements again, and here's where it gets even more concrete. Multiple payment providers in the APAC region, especially in Singapore and Japan, have quietly expanded their liquidity nodes connected to Ripplet. That usually happens only when new corridors or regulatory green lights are in place. Combine that with the fact that the Monetary Authority of Singapore has been pushing tokenized cross-border settlements under Project Guardian, and it's almost laughable how clear the setup is. Ripple is in the room, and XRP is the only bridge asset tested and ready for those corridors. Now add this to the equation. U.S. inflation data came in higher than expected, which ironically strengthens XRP's narrative. Why? Because high inflation destroys trust in fiat settlement systems. When banks and corporates lose faith in traditional remittance efficiency, they start looking for alternatives that settle instantly, cheaply, and globally. That's XRP's entire purpose. So yes, macro chaos is XRP's fuel right now. But let's talk numbers, because sentiment means nothing without data. Ripple's on-demand liquidity ODL volume in 2023 hit over $30 billion, and that was before full regulatory clearance in the US and before ETFs entered the crypto conversation. Analysts from Misari and Cow now estimate that ODL volume could surpass $120 billion annually once institutional corridors in Asia and the Middle East fully open. Do you realize what that does to XRP's circulating liquidity? The velocity of real-world demand would outpace speculative trading volume, something Bitcoin hasn't achieved even with ETFs. And there's another layer nobody seems to grasp. Ripple's private and public chains are becoming interoperable, meaning the same liquidity pools can move between enterprise transactions and the open market. That creates something the XRP community has been waiting for years, a direct spillover of institutional volume into the public ledger. Trillions in tokenized assets eventually need liquidity, and XRP is positioned right at that bottleneck. So when Garlinghouse says the end of November will be defining, it's not just an event, it's a liquidity window. Ripple knows how to time these moves. They've coordinated launches before around global fintech gatherings, central bank pilots, and payment standard rollouts like ISO 2022. This time it's bigger. This time it's synchronized. What does this mean for XRP holders? Simple. Volatility first, breakout second. You'll likely see a fake dip, maybe a shakeout designed to flush out leveraged traders, and then the surge. The type of run that feels slow at first, then suddenly goes vertical. All right, let's cut through the noise. Everyone throws around predictions like candy. $10, $50, $500 XRP. But if you actually want to catch the move before it happens, you need to know what signs to watch. XRP doesn't move randomly. Its surges have always followed a clear chain of events: regulatory positioning, liquidity unlocks, institutional inflows, and narrative ignition. So let's break down those signals that typically flash right before XRP goes vertical. First, the liquidity maps. When XRP is about to rally, the bid depth on major exchanges like Binance and Bitstamp expands drastically while sell walls get pulled down. You'll see thousands of XRP disappearing from order books within hours. That's not retail traders. That's whales clearing resistance levels to make room for larger moves. The second indicator, ODL corridor activity spikes. Ripple's payment partners move massive XRP chunks between regions, typically Singapore, Mexico, and the UAE. When you see unusual on-chain flows between these areas, that's usually the warm-up before an announcement or integration. Third, and this is crucial, XRP's social sentiment usually flips just before the breakout. Historically, XRP's biggest moves began when retail confidence was lowest. Why? Because institutions need liquidity, and they prefer to buy when the market is exhausted and doubtful. That's exactly what we're seeing right now, where sentiment is cold, search interest is down, but whales are quietly accumulating. It's the same setup we saw before the 2017 surge and again before the 2021 minun. Now, one of the most overlooked catalysts is regulatory momentum. Every time Ripple clears another legal or jurisdictional hurdle, capital unlocks, not just from the US, but globally. Remember, XRP doesn't need full SEC approval to run. The majority of its payment volume happens outside the United States. What's coming at the end of November is more about global positioning, Ripple expanding corridors and locking in partners that can't even operate through Bitcoin or Ethereum due to settlement speed constraints. XRP fills that gap. Let's also talk about Ripple's Swell Conference, because this year it's not just a showcase, it's a strategic stage. Every year, Ripple uses Swell to announce major partnerships or product expansions. The timing this year, right before the so-called massive November window, isn't random. Swell acts like a launchpad, and insiders know that whatever is being prepped for announcement has already been tested behind the scenes. When the news drops, it's usually just Ripple making it public. The execution's already in motion. Here's another tell. Most people miss exchange wallet movements. When Ripple or its partners prepare to ramp ODL transactions, exchanges start adjusting their XRP reserves. They move coins from hot wallets to cold wallets or to custody services. These movements can be tracked publicly, and they almost always precede big volume spikes. And now let's be blunt. The timeline that's circulating about end of November, it's not about hype, it's about preparedness. Ripple's team and institutional partners coordinate these phases around fiscal quarters, settlement cycles, and regulatory clearances. This end of November period lines up perfectly with Q4 financial reporting, meaning major institutions want exposure or testing before the year closes out. So, what should you, as an XRP holder, do? Pay attention to behavioral data, not just price. If Bitcoin stalls while XRP's liquidity flows increase, that's your cue. If ODL corridors light up, if Ripple's social team goes quiet, they always go quiet before big news. And if on-chain volume starts climbing faster than market cap, that's when you hold your position tight. Because by the time the headlines start screaming XRP surges to new highs, it'll already be too late to position yourself. The smart money moves early, and that's what's happening right now under the surface. So here's where everything ties together: the money, the timing, the partnerships, and the market psychology. Everyone's talking about the end of November like it's some random rumor, but if you connect the dots, it's obvious this window isn't accidental. Ripple's moves right now are coordinated with global liquidity shifts. Central banks are testing settlement layers. Tokenization pilots are entering live stages, and Ripple just happens to be at the center of that storm with XRP as the fuel. Let's zoom out. Ripple's valuation after that $500 million capital injection sits around $40 billion, and that's not speculative value. That's based on real partnerships, regulatory clarity, and cash reserves. They've built a company that now looks more like an international clearinghouse than a crypto startup. That's the first thing most people miss. XRP isn't just another token, which it's the infrastructure layer for the next phase of financial rails. That's why institutions are moving in silence right now, while retail is still arguing over whether it can hit $5 or $10. Now, about that massive November, it's not just hype. It's a convergence of three key catalysts. First, Ripple's swell conference announcements, which usually include updates on new banking corridors or government-backed partnerships. Second, institutional rebalancing before Q4 closes. That's when banks and funds that are sitting on the sidelines step in for allocation before they finalize annual reports. Third, market psychology. November and December have been statistically the strongest months for crypto for nearly a decade, with average Bitcoin gains of over 30% and altcoins following suit. XRP typically amplifies those moves when liquidity deepens. If you're watching carefully, you'll notice Ripple's ecosystem expansion is aligning with the broader narrative of global tokenization. Real estate, stocks, bonds, even carbon credits all are being tokenized, and they'll need fast, compliant settlement bridges. Ethereum can't handle that throughput efficiently. Bitcoin isn't designed for settlement. XRP's structure with 3 to 5 second settlement and negligible fees makes it the logical candidate for mass adoption once regulation clears the path. That's not speculation. That's math and infrastructure reality. But here's the part most people overlook: the accumulation phase. Every bull run starts with boredom, prices stagnate, engagement drops, retail exits, and that's when institutions quietly load up. That's happening right now. Whales don't chase green candles, they create them. And if you've been around long enough, you know XRP's biggest moves come when the crowd least expects it. So what's the real play here? You don't chase hype, you track fundamentals. Ripple is becoming the settlement backbone for institutional finance, one corridor at a time. They're setting up a system that will make cross-border payments as instant as sending an email. Whether the mainstream realizes it or not, it's already happening. By the time most retail investors wake up to it, XRP will have priced in most of that growth. End of November is likely the inflection point, not the peak, but the pivot where the narrative flips. Expect announcements, liquidity surges, and renewed market interest. The noise will be deafening. But remember, the smartest investors aren't reacting to news, they're anticipating it. So, if you're holding XRP, stay alert. Watch for the signals in liquidity spikes, ODL expansion, Ripple's quiet PR phase, and institutional inflows. That's your confirmation. And before we wrap up, let me say this clearly. Crypto investing is risky. None of this is financial advice. It's market analysis based on patterns, data, and observed behavior. Always do your own research, verify your sources, and never invest more than you can afford to lose. That's all for this one. If you've stuck around this long, you're already ahead of 99% of traders who quit before the payoff. Keep watching the market closely because what's coming next might just define the future of XRP and possibly the next era of digital finance.